And as we talk about the NASDAQ, I want to bring it to our next mover because it is pertinent, certainly, and that is Meta. Analysts say Meta is still figuring out the Metaverse and is set to keep burning cash until it gets there. Needham, in particular, downgrading the tech giant. Laura Martin there saying the company formerly called Facebook, of course, will see costs that exceed revenue for the next 2 years. The stock price is right now down by 2.5%. She talks about structural valuation risks for the stock, that there's competition, that there is consumer behavior that is shifting, regulatory risks, metaverse investment risks as well. Meta's already down about 50% this year. You can see about 23% over the past 3 months. And by the way, there aren't too many sell equivalent ratings on Meta, only 3 of them.
Yeah.
So this is the third.
$10 billion is what Meta was planning on spending on the metaverse this year at a time where advertising is already going to be pulled back by companies who are trying to position themselves as best as possible for any impending recession, also looking across things like headcount. And so with that, marketing, some of the advertising expenses, usually the first to get trimmed, that directly impacts, even though it is the large duopoly that is between Meta and Google or Alphabet, that still is not averse to the risk that is very much permanent right now, and imminent, I should say, as well, within this broader advertising landscape. Now, they do have the targeting ability, and for Google, they've also had the search engine optimization side of the advertising sphere that they've been able to run away with. But it just goes to show how much the actual volume and the dollars spent may come down, and that's directly going to impact Meta at a time where, again, there's a lot of costs that are going out the door on trying to make the metaverse real.
I'm going to try very hard not to turn this into a Yahoo U, but I love that Laura brings up, quote, several structural valuation risks. And you see that statement, and it comes despite Meta shares trading on a price to earnings multiple at one of the lowest levels in more than 5 years, if not ever, about 14 times forward earnings. That's almost a utility type company valuation multiple. It is a market multiple below the S&P 500. This is Meta here. I understand they're going to have some problems growing over the next few quarters, and the cost to build out the metaverse is going to weigh on profits. But it's remarkable to see Meta trading at valuation like this. I would have never thought I would have seen this anytime soon, at least when it pertains to that company.
But have you ever seen an analyst say to use any company, insert company here, as a source of funds? I mean, I have never heard that person.
Not a Meta.
Yeah. So that is significant here. Laura Martin calling out over at Needham.